guys, welcome to the Trading Parrot. Yesterday we nailed both of our targets from the live stream. Just a quick recap, we talked mainly about this CME gap and the chances that the price was going to go from 62 to 64 to take that liquidity. That target was taken. We also mentioned that on the lower end, we have the largest level of liquidation from the past 30 days, sitting roughly at 61.2. That is also gone. I mentioned that the delta was putting the shorts in a larger risk and that I was in favor of seeing a move on the 4-hour RSI towards the resistance. As you can see, the RSI touched the resistance, got rejected, and then make a final push to 53. With this move, it took all the liquidity from the CME gap. And right after losing the incentive to continue going higher, it faked out back into the range on the 4-hour. During the pullback, as you can see, we went back into RSI 32, and right now we are starting to put a new low. Tomorrow we have the FOMC meeting with a 99.5 expectation of no change, and although now it seems to indicate that most people are expecting to go lower, there's still a 0.5% expecting the interest rate to ease. As you can see, yesterday we were attempting to break above the resistance on the daily, but we got rejected violently. And right now, if we close the day like this, we will be putting a lower low on the RSI. We even placed the daily RSI as a resistance line here, calculated with an RSI of 49, and you can see how perfectly we got rejected by our line of resistance. Let's have a look, guys, what's coming ahead. What's the likelihood that I'm seeing right now on this, going for lower prices? If you like this type of content, make sure that you're subscribed to the channel. Our views have doubled in the past month. All the views are organic. I have never paid for likes, for new followers, or any sort of cheating in this channel. So I honestly appreciate whenever there's a new subscriber joining. That means a lot to me, and it keeps me motivated to keep analyzing the charts, even if I haven't slept the night before because the baby spent the whole night crying. We are looking here at the daily chart on BTC. You can see that from early March, we have done 1, 2, 3, 4, 5, 6, 7, 8, 9 candles attempting to break our support for this particular range. Personally, I still have the expectation that the RSI should print a lower low here on the daily relative to the 23rd of January. If we saw something like that, it will be a massive opportunity to enter very early and in preparation for a potential breakout anywhere in this zone here. Whenever I place any large deal, I will be the first one to let you know if you follow me on Twitter. My handle is Trading Parrot. And by the way, yesterday I mentioned that I was going to announce the winner of the NFT, which I did on Twitter. I'm trying to contact this user here in this particular video, and so far I'm only getting responses from scammers that are pretending to be him. So Pro Drones 8824, make sure that you claim your NFT, otherwise I'm gonna have to flip again and find a new winner. I will wait until Friday. As you can see, the alts are getting slammer. I've been telling you that we are looking for a good opportunity, but that opportunity, being totally honest, hasn't revealed itself yet. And I think Bitcoin needs to tell us something very simple. How are we going to close this candle today? Today is the last day of April, and by the minute I can see that the candle of April is constantly flipping between being an engulfing candle or getting bought up and then pushing slightly higher. Just so you know, if we are below 61.2, we are printing officially an engulfing red candle, which is quite bearish and quite scary at the same time, considering that this is a monthly chart. Having a bearish candle on the monthly chart could prepare the stage for the red outcome, going to 52. It could go lower, but at the very least, it should go to 52 if we close the month of April as an engulfing red candle. In the past few hours, as you can see here, there's been massive liquidations from BTC positions, and most of them in the last 24 hours have been from longs. 224 million in longs liquidated versus shorts by 58 million. All of these liquidations seem to be reducing the open interest, meaning that there are less positions open, which is something good for the market because it cleans the market and it paves the way for a potential move to the upside. But as soon as these guys got liquidated, new long positions were open, and that open interest increased just as much as it was reduced before liquidating these large positions, which is a big shame. On the weekly, we are at 62. We're getting very, very close to our target home of 55. You can see that it's going so fast that it has even left my channel bearish and is even breaking below it. Of course, we are only on Tuesday, so there's a lot of time for anything. We could even close the weekly pointing up and targeting a top for this channel that is just being defined. A reminder that we are with a warning buy on Cerberus, meaning that we are paying massive attention to what happens next, and we are searching for amazing opportunities that usually reveal in the same week or in the weeks after a warning buy. Very fastly, the large holders are starting to withdraw as opposed to doing deposits like around here, indicating again that the opportunity could be around the corner. And finally, the Hong Kong spot Bitcoin ETF launch, also the Ethereum one, and there was barely between 6 and 8 million on the first day of opening. Many people are very disappointed with that, and many other people are incredibly bullish, considering that the vast majority of the crypto users are located in Asia. And this is the first ETF that is offering these products for spot to users in Asia. Sure, it's not located directly in China, but Hong Kong represents a hub of technology, and many countries in Asia are going to use it as a proxy to get access to these products that before yesterday were not available. And remember that this is coming from countries that were banning cryptocurrencies, and now they're making them legal. During the ceremony of the launch, one of the CEOs of one of the ETFs was saying that they expect a slow but steady increase in the adoption. So hopefully we're going to start seeing larger inflows. The people that were more bullish were expecting 300 millions in inflows, and we are barely getting 6 or 8. What you're seeing here is the Federal Reserve balance sheet, their investments, and we track it since very long. During the bear market, they were selling like this, and during this full rally, they have been buying, at least in average. And what we're seeing here, this is a breakdown from this trend up. So the question is the Federal Reserve now going to start continuing with this sell because this looks like a bearish flag, or is this going to get bought up and they're just going to continue printing more and we will continue with this trajectory? Obviously, if we continue going higher, that's going to help all the markets. But if it breaks down below it, it could take us through some very tough times like we did from December 2021 up until January 2023. We talk about this divergence between the Bank of China, all the liquidity injected into that economy that has a massive influence on the direction of the price of Bitcoin, as we covered in many videos in the past. And we talked for months about this divergence that started from late December 2023. And we said that there is an expiry date written here because the Bank of China is reducing how much liquidity they inject into the economy, just like they did around here and around here and around here, all of them coinciding with the largest corrections of Bitcoin. So we have since December 2023 until March 2024, 3 months of divergence. And currently it seems to be playing out because the price has broken below the support and there are no news of extra liquidity coming from China. I will continue to monitor this just as like I do with the Federal Reserve and all the other sources of liquidity, so make sure that you're subscribed to the channel. I learned to look into the global liquidity thanks to this account, TED Talks Macro. I use many of his indicators, and this one is showing the correlation between BTC and the traditional market liquidity coming from the US bank reserves. And currently you can see that we are in a small red, meaning that there is less injections of liquidity. Of course, we are approaching elections, so some people are speculating that there should be injections of liquidity as we approach the period of the actual election. In regards to what's going on with the alts, very important that we keep an eye on the Bitcoin dominance. As you can see, our level of support at 54 is currently pushing the Bitcoin dominance higher to 55. I will assume that if Bitcoin starts breaking below 60K, we should see another push of the Bitcoin dominance to higher highs, possibly to 57. As I keep saying, Bitcoin dominance being bullish means that you most likely need to stay away from the alts at least until Bitcoin finds a new range. And right now, most of the bullish breakouts that we saw in the past 2 to 3 weeks are currently losing support, some of them printing inverse cup and handles with very low targets. For example, on Solana, it's pointing to 38. It doesn't necessarily need to play out like this, but you get the point. Alts are not looking yet bullish. Of course, there are some exceptions. There's always an outlier that is still maintaining the range, like R and TRX, but most are looking like a failed breakout on the daily. Some of them are already entering the Crosby ratio by price. For example, with AVAX, we are already at minus 11. The last time we were around there was this swing low, and that gave 120% projection to the upside. I will keep you updated day by day. Currently, the old market is in the oversold area. We are at 32. And before we look into the liquidity and the levels that I'm looking as interesting bounces from Bitcoin, if you want to trade any of the setups or you want to be prepared for those big opportunities that are about to reveal in the next few days or weeks, make sure that you have an account on one of these exchanges. For example, OKX is offering up to 60,000 price pool. This is one of my favorite exchanges, and if you're struggling to get access to perpetuals and futures because of KYC, consider also opening an account on BingX. On this exchange, you can claim up to 6.2K in rewards. Both links are in the description. Let's have a look at the liquidity. We are at a price of 61, and there are so many liquidations from long that could trigger from around here. So I will be very surprised to not see the price touch below 60K in the next week. Anything can happen, but it's very low likely that we don't touch anything below 60K. And it makes also a lot of sense that after punishing all these levels around here, that we also have a spring that could potentially catapult the price to highs that we haven't seen in a while. I'm talking about 72 and 75. There's quite a lot of liquidity there. It's a bit less likely that we get there compared to touching below 60. But if we see a strong reaction below 60, pushing the price higher and getting bought up very quickly, that will be the perfect excuse to increase the likelihood that we get to 72 and 75. Right now, 60K is quite loaded with liquidity. You can see it here on the monthly. It's starting to look pretty yellow. The largest whales, the brown ones, seem to be selling, followed by the purple ones that are also pointing down. We're starting to see that the small wallets with $100 to $1,000 are very interestingly pointing up very quickly. I don't know what kind of trick is this. Most of the times when we see this pronounced angle on the smaller wallets, that usually happens together with the rest because they tend to follow what the rest is doing. But in this case, they are the only ones pushing very high. So this could be a trick from a whale, maybe spreading their orders into very small wallets. Who knows? But at least now you're informed of what's going on with the liquidity. And let's look at those live levels. The first line of support that yesterday was showing decent amount of liquidity was at 60.8, and that is the one that currently got filled, that pushed the price to 61.5, but currently is being challenged once again. And we got liquidity that is being reduced to 300 from 480 at 60.2. We have 440 at 60.1, and at precisely 60K we have 500. After that, it's quite thin up until we get to 56.7 with 943. Right now, that is the largest one coming from above it. And the last one that is significant with 956 is located at 54.3. Of course, these orders can change anytime. There can be manipulation. But it's interesting to see that we have almost 1,000 below 60, and around here, if we count all together, we have 1,000, but it's spread into smaller chunks. Yesterday, the highest level in the last 30 days was located here, below the price at 61.2. Now we are below 61.2, and the largest levels are all located above the price, at least from the past 30 days. The delta is pretty mild at 300, putting the shorts in risk, and we are starting to have new fair value gaps above the price. This last one that is new starts from 61.5 and it spreads towards 63. That's the most likely to get filled just because the price is very close to it. Underneath this area here, you can see that there is a massive vacuum. The liquidity got already taken when we wick below to 58.8. So if we break this and close below, we should expect a move quite quickly to all this area. It's impossible to anticipate at what point precisely it's going to stop if it does break down, but assuming that we break down, usually focusing on the areas of largest liquidity can give you a great hint. Thanks so much for watching. I'll see you tomorrow. Take care.